Today, we're discussing the recent events surrounding SoFi, which saw an interesting day in the markets. I'll break down what happened, why it happened, and what the data is indicating. Let's dive into it.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. So, SoFi experienced a drop of 2.41%, reaching a low of $6.47 and a high of $6.67. The volume for the day was 26.07 million shares, compared to an average of 41.9 million, indicating relatively low activity. Despite the numbers, the data doesn't fully reflect what truly happened today. As usual, I like to analyze where the volume is coming from, and this time, it's clear that algorithmic trading played a significant role. These algos often generate misleading data, especially when the broader market is reacting to external factors. One of the major influences on the market today was the ongoing conflict in certain regions. This situation, along with other factors, has created uncertainty, and the markets are feeling the pressure. Additionally, the upcoming CPI report is adding to the tension. As of now, the market is heavily focused on rate cuts, with a 47.5% likelihood of a 50 basis point cut and a 52.5% chance of a 25 basis point cut at the next meeting. The market's desire for rate cuts is clear, but there's a lot of fear driving the current sentiment. Algorithmic trading has been instructed to sell off assets, which is why we're seeing some discrepancies in the data. Even though there was some buying activity, especially from institutions, the overall trend today was downward. On social media, there's a lot of talk about shorts driving the decline, but the data doesn't fully support that. In fact, shorts returned about 540,000 shares today, bringing the short interest to 17.19% of the free float, or approximately 179.92 million shares. This suggests that the downtrend might be more of an overreaction than anything else. When looking at the available shares to borrow, it's quite cheap, with an annual rate of 0.34% and more than 10 million shares available. If the fear in the broader market were truly valid, we'd expect shorts to double down, but that doesn't seem to be the case. The entire F sector took a hit today, yet SoFi's decline appears to be more about market sentiment than any specific issue with the company. No new developments from SoFi today. No SEC filings, it's just a matter of the broader market's influence. Looking at options, there's a significant amount of activity that could impact SoFi this week. There were 2.54 million in calls and 1.27 million in puts, with 46% of the options activity being bearish. This indicates that some are anticipating more downside, but there's also a lot of hedging going on, particularly around the $7 mark. The open interest shows 7,000 contracts at the $6 strike price, 8,000 at $6.50, and 40,000 at $7. There's clearly a barrier at the $7 mark, so if SoFi manages to rise with positive CPI data, there could be some movement at that level. However, around the $6 and $6.50 marks, there doesn't seem to be much manipulation or suppression happening.
With SoFi closing at $6.48.
It's landed right on a pivot point, so keep an eye on this level in the coming days. There's strong support at $6.48, and if it holds, we could see some upward movement. The next resistance level to watch is $6.78. On the downside, support levels to monitor are $6.19 and $6. Despite today's events, SoFi's technical indicators show that it's still breaking down, though the short data remains relatively optimistic. The options activity suggests a neutral to slightly optimistic outlook, though it's feeding off the broader market's negativity. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.